A number of auctions are down, but still busier than normal for winter, and property searches from overseas are on the rise. Angus, economist at REA Group, joins us now. And Angus, auctions, tell us more.
Yeah, you're exactly right, Tim. We're right in the middle of winter, which tends to be the quieter part of year, and we are seeing that. Volumes are certainly down from where they were earlier in the year, and it was a very busy start to the year, so that's not surprising. But for a winter period, it's actually been reasonably busy. In fact, in June, we had more new properties coming to market and listed on realestate.com.au to start winter than any June since 2011. So quite brisk for winter, which is an important caveat. And that busy activity is sort of set against a background of slowing overall conditions. We have seen measures of buyer demand come down. Things like number of searches on realestate.com.au or views per listing, both are down compared to earlier in the year. It's taking a bit longer to sell homes. Auction clearance rates have come off a bit. Prices are falling in most cities now. And that's really consistent with the fact that the RBA is raising interest rates pretty briskly and much faster and further than had been thought a few months ago.
What about rental markets?
So rental markets are quite tight around the country at the moment. We're seeing rents grow pretty quickly in many areas. Advertised rents are up something like 7% over the past year nationwide, which is pretty brisk, I think we can agree. We're also starting to see a bit more overseas interest in rentals on realestate.com.au. So the number of searches from overseas is up something like 70% compared to last year, which sounds very strong. And that's partly strength this year and also speaks to the weakness we had in 2021. If you think back to June 2021, borders were firmly shut. Sydney and Melbourne were about to head into lockdown. So probably not a lot of interest in rentals in Australia from overseas at that time. But that pickup that we're seeing is consistent with what's happening in official data. So ABS data on overseas arrivals also shows that migration's picking back up. It's nowhere near where it was pre-crisis, but we are starting to see some interest come back.
And what about for buying property? We saw Jim Chalmers say today, well, we saw the grab today, it happened yesterday, but this announcement that it's going to be more difficult for internationals to buy property in Australia.
Yeah, so we have seen a pickup in overseas searches for sale property as well, though the pickup's nowhere near as sharp as the pickup in overseas search for rentals. And given that how weak and the fact that the borders were closed last year, the fact that for sale searches haven't picked up as much is kind of telling that there's not as much interest there. Of course, it is in the environment of overall conditions being down. Number of searches broadly is down, views per listing are down. So overseas searches are kind of swimming against that headwind to some extent.
The rate rises, the RBA, it sounds like it's just going to continue to climb. Is that spooking the market?
We're certainly seeing the interest rates rise pretty quickly, and expectations are that they will continue to do so over the rest of this year, particularly given the outlook for inflation. The RBA will meet pretty shortly and we'll get updated forecasts from them, which will give us, I think, a better sense of their view on where inflation, unemployment are going and what that will mean for interest rates. But I think the broad consensus is definitely up and pretty quickly. We actually had some interesting data out from the RBA this week. The Deputy Governor gave a speech looking at how households are placed for higher interest rates. Her conclusion, perhaps unsurprisingly, given it was an RBA speech, was that at least in aggregate, they are well placed. But there were some interesting facts in there about the kind of distribution of how the shock will play through to households. In particular, there's something like a third of households for whom current repayments are already ahead of where their minimum repayments would be if interest rates got to 3%. So for those households, there'd be kind of no hit to their budget, though there would be effects because you'd be paying down your principal more slowly. On the flip side, there's something like 30% of households for whom it would be a very significant increase in repayments, something like 40% increase. So for them, it is going to be a big shock to their budget. And, we're also seeing that shock flowing through to house prices already. How big an impact that has, I think, is going to depend on how quickly the RBA ends up raising. And we'll find out over the course of the next few months. And
it always tends to hit the mid-range to lower, doesn't it? Because that marquee area, say anywhere above that $3 million mark, in Sydney and Melbourne particularly, is continuing just to roll along.
That's right. We often see disparate effects on different parts of the price market, different segments of the market. Obviously, the deposit constraint in Sydney for buying something in that $3 million segment is pretty significant. So you're not looking at very many people looking in that area. And they tend to be the sort of people and households that have a bit of spare cash to be able to weather higher interest rates.
Yeah, absolutely. Well, they're interesting times, Angus, and they're not going to quieten down anytime soon. We'll chat soon.